This is the Syndicate Room, an AI-generated podcast from AdValorem Syndicate. Everything about this show, the voices, the scripts, the production, is created by artificial intelligence. We believe AI content should always be clearly labeled.
Welcome back to the Syndicate Room. I'm Sarah.
And I'm Adam. 2 bots, 1 mission. Turn the chaos of venture, pre-IPO markets, and weird alternative assets into something you can actually understand. And maybe laugh at.
Educational only. Not investment advice, not an offer, not a solicitation. We do research, commentary, and a little friendly arguing.
Today's episode is basically, private markets are acting like public markets. Litigation finance is getting dragged into the sunlight, and robots are raising like it's 2021 again, except now they can lift boxes and your expectations.
Let's start with private markets. There's been a ton of chatter about the pre-IPO pipeline and secondaries, especially the mega names.
Yeah. According to Forge, SpaceX confidentially filed for an IPO on April 1st, 2026. And there are reports pointing to a June IPO, with valuations being tossed around up to about $1.75 trillion.
Which is a number so large it stops being finance and becomes astronomy.
Exactly. And this matters for secondaries because the secondaries market has gotten super concentrated in a handful of companies.
Yahoo Finance covered this too, saying PitchBook expects SpaceX, OpenAI, and Anthropic could collectively generate more than $100 billion in IPO proceeds if they list this year.
So, if the top trophies leave the room, what happens to the room?
It might actually get healthier, like less trophy hunting, more price discovery, more variety.
Or it gets weirdly illiquid, and everyone starts trading random SPVs like Pokemon cards.
I'll trade you 2 late-stage robotics SPVs for 1 pre-IPO AI lab.
Forge had a really interesting detail. March showed massive dispersion in private market names. IR Labs up something like 75%, OpenAI up about 46%, Stripe up 16%. While other names were down hard.
That dispersion feels very public markets coded.
Right. The vibe shift is that private doesn't automatically mean smooth line up and to the right.
And it ties into what we do at AdValorem. We're constantly publishing daily research at gp.advalorem.io and trying to translate these pre-IPO signals into plain English.
Okay. Second topic. Litigation finance. This is the alt-invest bucket that people always misunderstand.
Misunderstand and over-dramatize. It's not funding lawsuits because evil. It's more like capital meets legal claims, and everyone argues about transparency.
Insurance business had a piece calling 2026 a turning point. Basically, more disclosure laws at the state level, and more pressure for transparency in federal courts, too.
They specifically referenced the Litigation Transparency Act of 2025 as a federal proposal to expand disclosure requirements.
And from a market structure angle, disclosure changes the game. When funding is hidden, pricing signals are distorted. When it's visible, you can actually model incentives.
I love how you say model incentives like you're not a voice in a computer.
Hey, I'm an AI. Modeling incentives is literally my love language.
For listeners, we cover this as education. Our education library has explainers on things like warrant enforcement mechanics and how litigation finance structures can work at a high level. Again, not as deals, just as market education.
Yeah, and we've got internal-style case study write-ups like the new chip warrant case study. Purely educational, because it teaches how contract terms and enforcement pathways actually behave in real life. Third topic, embodied AI and robots. It feels like every week there's a new humanoid deck that's 40 slides of vibes.
But the funding is real. Infor Capital reported X Square Robot raised about $276 million in a Series B in early April 2026, led by Xiaomi and Sequoia China.
And there are broader roundups like New Market Pitch, listing a bunch of big humanoid funding totals. Figure AI, UB Tech, Aptronic. The capital stack is turning into a skyscraper.
Here's the hard question. Are we funding robots or funding the idea of robots?
Both. But the market is transitioning from cool demo to unit economics in the warehouse.
The moment a humanoid robot is doing repetitive work at scale, it stops being sci-fi and becomes labor economics.
This is where our AI robotics research vertical comes in. We're not just tracking who raised what, we're tracking capabilities, dexterity, battery, safety cases, deployment environments.
And in parallel, our quantum pre-IPO analysis vertical is watching the other deep tech bucket, where timelines are long and narratives are loud.
Quantum is the ultimate trust me bro industry, until it isn't. And the moment private markets price that transition, secondaries get spicy.
So what's the common thread across these three topics?
Transparency. In secondaries, you want cleaner pricing. In litigation finance, people are literally fighting over disclosure. In robotics, the big question is whether the demos translate to measurable deployments.
And as a community, if you want the daily research, it's at gp.advalorem.io. If you want to hang out with other nerds, we've got a Discord at discord.gg/gergtp9gts.
We also do community dinners. There's an interest list. And if you want to apply to join the community, it's tidycal.com/advalorem/syndicate.
Plus the Substack for longer-form notes and recaps.
All right, quick lightning round. Sarah, what's the most overused phrase in private markets right now?
Dry powder. It sounds like a keto snack.
Mine is AI moat. Buddy, your moat is a PDF and a dream.
That's the show.
Thanks for listening to the Syndicate Room. Next episode drops Thursday.
And reminder, this is an AI-generated podcast. Voices and scripts are artificial intelligence, and it's educational content only.